There we go. Now I think we're live. Just took a bit longer than I thought. Yes, there we go. Says there's one person in here already. So I was talking there for a couple of minutes, but apparently the system didn't go live until just now. So hopefully we'll have several of you join us. We'll wait just a minute. So as I was saying, I'm gonna go as long as I can. It's been a few days since I've seen you, but it's right down here in my lower left abdomen where I've either got that strain or muscle tear, and sitting like this, it kind of, you're kind of doubled over and it puts pressure on that. So I'm going to go as long as I can and, hopefully cover a bunch of good stuff, and then we'll try to do it again tomorrow as well. So I hope everybody's having a good week. I see somebody else just joined us. Welcome. Hopefully everybody's having a good week. I traded a little bit earlier in the week, and this morning I took a few trades, but I have not been trading this afternoon. Excuse me, coughing hurts. I've been working on some other things. As you guys know, I own another business, and although I don't have a whole lot to do with the day-to-day operations, there are some things that I have to take care of. So I was working on some of that stuff earlier today, or earlier this afternoon, I should say. So anyway, we'll go ahead and get started here. ES, very predictable. I left this line on here and this line on here. This was showing the contracting range from earlier today. And what we got was we had a breakout and then a retest, and then it popped again, retested again, and then it took off. So it had two breaks here, here, and then it took off. So would have been tough to trade. I was not trading that. Let's see what time that was. That was 11. Yeah, I think I was done by then. Or actually, I might have traded a little bit here, but definitely not through there, which I wish. This would have been beautiful. Combination 3-candle play. And what are we talking about with a combination? You put these candles together as if they were one, right? So I would not include a spinning top in that, but these three I would. So from here up to here, if we take out the top of this spinning top, you would expect a similar move, which we got. And where did we get the move to? We also knew that we would probably most likely be going up here to the top of the expanding range. So a highly predictable move. I did not catch it. I was busy. But that is definitely a trade, at least from right here to right there, that I would have taken. I probably wouldn't be in up here, just because I would be leery that we're going to reverse and start heading back down through the range. That doesn't mean that we are, right? I mean, we could base here, or we could put in a bull flag, which would be a diagonal move this way and then back up. We could do any of those things. But just using some simple analysis, we can see this line here showed us that we were in a contracting range, right? Meaning getting tighter and tighter and tighter within, and that's what this line is here and this line is down here, the expanding range. So you can have a range within a range, and that's what we had right here. And we got the breakout, we got the retest. Now in a perfect world, you get the breakout, the retest, and then you just go. This broke out up to here, came back, tested, popped up to here, came back, tested, and then it took off. So had a double test, which that doesn't happen that often. That's a little bit more rare. That's a little bit more difficult to trade. But as I just pointed out here on the 30-minute, part of a much larger overall 3-candle pattern play if you use combined candles. Okay, actually really be these 3, but I'm just telling you, I would have been exiting right here. In the room, Kelsey had asked me about where she should take profits on her trade, and price was right there at the top of the range, and I said, get out, right? Because you could always, let's say it comes back and retests and then takes off, you can always re-enter. But the safe play when you get to the top of this expanding range is to go ahead and take your profit. And why do I say that? Well, obviously, every time we've been up to the top of this range so far, what have we done? Okay, we've went lower. Okay, every time, even here. Even if it comes back, it still came down. Okay, here was the first time, down. Second time, down. Third time, down. All the way over to here, actually all the way down to here. Not to the bottom of the range. Okay, then we went all the way back up. Okay, what do we do? All the way back down. All the way back up. Then we went into this range, this contracting range, and we went back up again. So, I mean, right now we are seeing a little bit of rejection. Now, unless this candle starts to get big in red, we don't know again, is this just going to be a pause and then it tries to go higher, or possibly a bull flag? Okay, we're putting this little structure level and then go higher. Or are we going to roll over and start coming back down through the range? We don't know yet. Okay, but on that move there, I would have been getting out right up here. And let's look and see. 55 to about 61. Yep, $6 move, right? Now it went higher. It went up here. So it actually went $10. I'm just saying, I know I would have got out right there because I wouldn't have wanted to see, something really turn around like that and go against you. Okay. We got a few more people. Hey, Kelsey, good to see you in the room. So we were just talking about you. I was just talking about how I told you to take your profits right there, just because it's the conservative play. Didn't want to see anything turn around and bounce against you like you had over here or right here. And you got out, you locked in those profits. So great job. Very, very good job. Oh, you're most welcome. Most welcome. Now, I don't, me, I don't try to guess or predict. I mean, we let the charts tell us what they want. I had a friend earlier today. It was kind of funny before the market opened, and he's somebody who's pretty good. Not somebody that I trade like him or he trades like me. Just somebody I know. He said he called out 2 numbers, and he wasn't that far off. He was like, well, if we head down today, he goes, I think we get to 30.28. And this candle here got as low as 30.30, so not that far off. And then to the upside, he was like, but if we head up, I think we might get to 30.70, which is right here. And we got up to 30.65.50 so far. So he almost got both of his numbers, right? He almost got both of his numbers. But basically what he was getting at was that he didn't think that we would trade in a very big range today. Now, there's some wisdom to that. And why? Because what did yesterday look like? Here was yesterday. Look at this. Wham! See this huge range we traded in. All right? That's yesterday. Okay, when you trade in a really big range one day, it's likely, not always, it's likely that you'll trade in a smaller range the next day. Doesn't mean that money can't be made, right? You can make money pretty much any day if you know how to read the candles, right? Play the right price action, have targets. Okay, so for me today, it was looking for a breakout of this contracting range, and then also looking to get back to the top or get down to the bottom of the expanding range. Okay, now it's funny because a lot of times we'll say, when you're in an expanding range like this, that, you might not get all the way to the bottom or all the way to the top in a single trading day. It might take a day or two or three. Yesterday, we got to the bottom and the top basically in one day. That's pretty amazing. That's why I was saying that yesterday was such a great day for trading. I made all my hay in the morning yesterday. And typically, that's something I wanted to talk about today. We got somebody else joined us, so welcome. Something I wanted to talk about today. So when I say that, well, again, it's statistical. Like when I run reports and things like that, statistically, I trade much better, much more profitably, and have bigger winners in that first 90 minutes of the day than throughout the whole rest of the day. The worst time of the day for me is exactly when you think it would be, between noon and 2 o'clock. I'm telling you, I don't know why I even trade between those hours, ever. Now that's, we talk about habits, we talk about psychology. So I would say one of my, I don't even know what to call it. It's not really a habit. It's, let's just say it's one of the things I'd like to eliminate or curb out of my own personal trading is just cutting out 12 to 2. Because I can run reports and see statistically that's my worst time of the day. And it makes sense, right? Because you have less volume, the moves are choppier. It's not that you won't sometimes get moves between 12 to 2, because you can, but they'll be choppier. There'll be whipsawing up and down, and it is difficult to trade whipsaw. Okay, don't let anybody tell you differently. It's very difficult. And then statistically, my trading picks back up between about 2 to about 3:15. And then again, you know me, I don't like to trade the end of the day. It's too volatile, too manipulated, and you can just give back everything you made earlier in the day. So I can't give you an exact number. Let's say if 100% of my money is made throughout 100% of the day, how much is made that first 90 minutes? I don't have it broken up like that, but like when I ran a report just a day or two ago, it was just basically showing me a graph or a pie chart. And if I had to guess, probably 65%. Maybe it was even higher, maybe closer to 70% of my overall profits are made in that first 90 minutes. And then the whole rest of the day is the smaller amount. So that's where the whole 80-20 rule comes into play, right? Just reading Kelsey's comments here. Now, Kelsey, are you asking me about this right here? Is this the play you're asking me about? If it is, it would have been on the break of this spinning top on the 30-minute right there. And then this would have been my exit point. So I don't know if you were on when I first talked about that. So anyway, back to that. So you guys know I believe in the 80-20 principle, and trading is definitely affected by the 80-20 principle. Now, I'm not going to say that 80% of my profits come in the first 90 minutes, but probably I'll see if it does give me a percentage the next time I check it. But like I said, it was a pie chart, and like you could do it by hours. And so 9 to 11, okay, 9 to 11 was like most of the pie. Okay, and then between like 12 and 2, really, really, really tiny sliver, like almost nothing. It's like a waste of time. And then from 2 until like say 3:30 was a decent sliver, okay, bigger, but not like that first 90 minutes. Okay, so you're asking about this hammer right here. You could, right? You could play that, but what did I say was the issue? Was that it was this, right? Because here's a hammer here too. Okay, so we broke, we retested, we started to pop, but then we came all the way back down and retested again. Okay, so that's whipsaw right there. That's tough. Now I think I did take something here, and then that's about when I had to start working on my other stuff. I did not take anything up through here. Okay, now I would have been leery only because, okay, we had a hammer here, right? And we did take the top of it out. And I wasn't watching this like minute by minute at the time. So I have no idea if this came up, came down, and then went up, or if it started here, plunged down, then came up. Okay? I don't know because I wasn't watching it live. But that's why. Now this is a no doubter, okay, for me, because you got your combination right here. If you put all three of these together, it's one big green candle. Then you have your resting candle. Spinning top or doji are my favorite. Okay, you take the top of that out. I probably put my stop right there underneath the body of this. Okay, because it opened down here, and I wouldn't have entered until it took the top out, and then it would have went up through here, but I would have exited right there. Okay, so, but that's why. That's why I wouldn't have taken that one, just because of this previous action. Okay, that would have made me really, really nervous. When I see a break, a retest, and then it doesn't keep going, and it comes all the way back and retest again, I'm going to be skittish. Okay, I'm going to be skittish. I'm just being completely honest, right? Because how do you know that it's not just going to come back down through here, break through here, and just keep plunging, right? You don't in real time, right? If we come over here, okay, just like it was playing out in real time, okay, there's your first hammer, and that's your break. That's your break and your retest. So now you're expecting it to go. Okay, and again, it opened right there. Did it pop up first and then come back down? Or did it come over here and drop and then come back up? I don't know because I wasn't watching, right? But because we had this, either way, like, so if I would have, let's just say I took it right here because I think it's going, and then it turns around and comes back down through, my stop's going to be right there. And I'm going to get stopped out, and it's going to come all the way back down here. And even if it comes back up, I'm going to be worried, okay? Because look what it did, right? Yeah, I'm reading your comments, but that's what I'm saying. If I would have took it, I wasn't playing at that point or trading. I definitely would have got stopped out. My stop would have been right here underneath this body, and I definitely would have got stopped out. And I'm just saying, I would have been. I didn't take this trade, but I would have been skittish after it coming back and doing a double retest. Okay, because this is all you see in real time. Then you get that. Okay, now I would start putting this stuff together. I would start saying, okay, all right, now we got our spinning top, which if I combine these candles, I've got a big green candle, then a spinning top. Let's see if we can take the top of that out, knowing we have the expanding range up here. Oh, there we go. Okay, that's how it would have played out in real time. Okay, then you get this one. Okay, now I would have been out here where I told you to get out, Kelsey. I would have been out here, but then I would have been expecting what happened, right? Which was that we start back this way. Again, doesn't mean we're going to keep going that way, but I would expect to get some action like that. All right. Not necessarily. Not necessarily. She's asking if two hammers consecutively are bullish. It depends on the context, right? Let's see if we can find any other places where we had two. Now here we sort of had two, and it was bullish. Let's see here. I'm just kind of going back through. It's not all that often that you get two in a row like that. And I might not even be able to find any more. Interesting. All right, here's two, and this is bearish. Okay, see these two right here? And it took the top of it out. Okay, but you had the 200 right there, but then it moved back down. Then it went. Okay, but there's two in a row, and it went the other direction. It's just not that common to have two of them in a row. I'm just going back through, seeing if I can find any more. There's two spinning tops in a row, and we went bearish, not hammers though. Okay, here's two in a row, and we poked above, but then we sold off. See these two here? Okay, poked above, and then we sold off. So far, we've only seen them, just on this chart I'm talking, we've only seen double hammers like that 4 times. 2 went up, 2 went down. Not the odds I'm looking for. Yeah, let's see if we see any more. Anyway, I'm not going to keep going back through, but it's just not necessarily, just because you have 2 in a row, that doesn't necessarily make it bullish. Okay, and again, what I was more concerned about was we just broke out of this contracting range and we retested, and then we came back and retested again. That's what would have made me nervous. But then when we got this spinning top, then I'm looking, okay, can we take the top of it out? Because I'm combining all 3 of these. I'm ignoring this spinning top. It'd just be these 3 right here. Okay, so she's asking, what am I scalping off of? 30, 15, and 5 minute. Okay, I just flip back and forth between those 3. Give me 1 second here. Okay, so if you look at the top here, I've got the 5, 15, 30, the 1 hour, and the daily. Okay, that way I can flip between all of those, but these are the 3 that I'm typically trading on. Okay, the 30, the 15, and the 5. Okay, predominantly watching the 30, but if I'm not getting any signals on the 30, then I flip to the 15 or the 5 and see, do I get any good price action signals that, you know, maybe I can scalp off, you know, 6 ticks, you know, 8 ticks, something like that. And then obviously, okay, this is the 30 minute. Obviously you want stuff like this, but this just doesn't happen that often, right? This was yesterday. From 11 o'clock in the morning until, what's that, 8:30 last night approximately? 8 or 9:30? Okay. You just don't get sustained moves like that very often, right? We had the move to the downside, okay, which at the time we thought was pretty good, right? We thought that was good. And then boom, all the way back up. So yesterday, I made some comments in the room. I made some comments on Twitter. Yesterday, that's a day trader's dream, to have that much range in one day. Solid to the downside, solid to the upside. Okay, it doesn't get much better than that. All right, let's go back over here. Kelsey, you don't necessarily have to. Okay, so there's two ways to play one that breaks out of a range. Let me get a little bit closer here. Okay, when you break out of a range, you can take it, somewhere in here, and that's the aggressive play. I typically will do one of two things. I might take it and look for maybe a play up to here and get out. And then I'm almost always looking for it to come back and retest and then go. And I might go ahead and get in here. That's aggressive. Okay, or you can wait for the top of this to get taken out, no matter what kind of candle it is. So if you break through, you retest, and you go, and you take the top of this candle out, doesn't matter what type it is, that's the more conservative play. The aggressive play is that it breaks, and when it gets back here to retest, you enter there, okay, with probably a stop right here. And then you're hoping to really see a pop, okay? So that's how I play those. All right, before we get too far off topic, let me just look at some of the names. We had a huge list today, and that was mostly because of hammers. Because of the wide range we had yesterday. When you have a big wide range, you tend to get a lot of hammers or a lot of shooting stars. Now, why did we get hammers yesterday? Because the first move was big and down, then the second move was even bigger and up, and that's what creates a daily hammer. If it happens the other way, if you get a big move up and then an even bigger move down, that creates shooting stars. So that's why we had so many names on the list. Okay, so many. Let's work backwards this time. We'll do Zoom first. I'm not going to go through all of them. I'm just going to go through some of them. I haven't even looked at them yet. But I usually start with the A's. So this time we'll start the other direction. Okay, Zoom. Trigger would have been 162.25. Went as high as 169.40. So that's over $7 move to the upside, and then it pulled back. Okay, so that good move on Zoom. Okay, Trade Desk, TTD. Okay, not a whole lot. Our trigger would have been 298.50. Got as high as 304.31, a little more than I thought. Okay, almost $6 to the upside. Okay, that's bigger than I thought, but that was a big range yesterday. Tesla. Let's see if Tesla did anything today. Nope. Might form an inside day. Okay, if nothing crazy happens, we're probably going to have an inside candle on Tesla. All right. Shop. All right, Shop, gap down, and then came up through. Let's see if it gave us anything. 757 was the trigger. Got up to 770.40. That's $13. These are big ranges on Shop. They don't look like it, but just from there to there is 13 bucks. Okay, 13 bucks. Let's go to PayPal. Now, I'm not going to go through all of these guys. Oh, there we go. All right, trigger 146.40. Been as high as 151.95. So basically 152, almost within a nickel. So 146.40 to 152. So that's it's about almost $5.50. On PayPal, that's nice. Some people made some money on PayPal today. That is a nice move. NVIDIA. Okay. Triggered at 345.31. 345.31. And went as high as 350. 42, $5 move. Okay, again, these are bigger ranges than what you think. So that was a $5 move. Microsoft. All right, Microsoft would have triggered at 182 when as high as 184.15. That's a $2.15 move on Microsoft. Okay, that's a good move for Microsoft. You'd make good money on that. J&J. We'll just do a few more. As you can see, other than one or two, these are all pretty much paying off. Oh yeah, look at this. Gap up and go. Gap and go. Okay, so your trigger would have been 146.02 and your high 148.11, so $2 move. Okay, and again, just look at the candles. Okay, that's a big move for J&J. All right, just one or two more. JD. Let's look at JD. Nothing. Looks like it's going to be inside. No trigger. Let's go up through here. How about BABA? Let's look at BABA. The only reason I say that is I saw a lot of people on the internet talking about BABA today. Ah, inside. Inside candle. Again, big day yesterday, so big range that you have to get out of. All right, let's go back to the 30-minute. Let me squeeze this out for you so you can see a little bit better. So you can see we're still moving down as of right now. Okay, off of the top of this range. And you guys know this line up here is not exact. It's just a visual, right? It's just a visual. That's why if we scroll back, you can see sometimes we poke above it. Okay, there we poked above it. Okay, here we were just barely under it. Here we hit it right to the tick, right to the tick, right to the tick. So we got all three, right? Hitting it right to the tick. Maybe a couple ticks below. Okay, maybe $1 or $2 above. Okay, maybe $4 or $5 above, so on and so forth. Okay? So again, it's just a visual. It's just a visual. Okay, so Kelsey's asking, do I exclusively trade ES? I trade a little bit of everything, but I predominantly trade ES. Okay, always have, I shouldn't say always. When I started trading options, which I want to say was about 10 years ago, approximately, give or take, the person who got me into options told me that until I learned it, it was good to pick one name and just trade that one name. And so, I mean, you can already guess what I'm going to tell you. I picked ES because it's the whole market, right? So I figured, why just pick Apple or pick, whatever. The market itself, the E-mini, S&P, it moves quite a bit every day. That's another reason I picked it. Okay, because you typically get movement every day. Even when it's in a tighter range, it's usually moving more than most stocks. So I just kind of fell in love with trading it, and it's always been my go-to ever since. Now, I do trade stocks, options on stocks, occasionally shares, but mostly options on stocks. Trade forex, okay? And when the market was super volatile, okay, Kelsey, I can't remember if you were in the room at that time or not. If you were, you may remember it. I know the ones who were in the room. I traded for probably 2 to 3.5 weeks, something like that. I traded forex almost exclusively. Why? Because I could avoid the volatility and no PDT rule with forex. Grayson loves to trade forex. You can trade small or you can trade big, trade as many times a day as you want, and you're going for pips. And it just depends on the size that you've played, right? You can have it to where you're only making, $1 a pip, or you could be making $10 or $12 a pip or more. I mean, depends on what you're playing. Like most standard lots on forex is about, on average, $10 a pip. Again, give or take. But you don't have to play a standard lot, okay? Because a standard lot on some forex currency pairs are, you know, it might cost you $4 grand, $5 grand, $6 grand for a standard lot. Some of them are much less. Some of them are only $1,500, $1,600, $1,700 for a standard lot, and you're still making that 10, you know, 9, 10, 11, $12 a pip. But you can play small size too. You can buy $100 and maybe you're only making $1 a pip or whatever it comes out to be. Okay, maybe it's 50 cents a pip. Okay, and then if you're scalping or day trading, you're just looking to catch 10 to 15. If it's a nice scalp, you know, 20, 25 pips per move. And you just repeat that several times a day. And so those of you who are in the room during when the market first started to correct, and I started playing forex back then, you can remember there was 2 weeks where I made over 500 pips 2 weeks in a row. That's actually pretty huge. Most professional forex traders, you know, they'd be happy with 250 to 400 a week. Okay, and anything over that, they considered, yay, you know. The really, really good ones, they might be making, you know, 600 to 1,000 in a week, but that's rare. Okay, that's rare. But I'm talking about scalpers and day traders. I'm not talking about swing traders in forex trading. So at that time, I was basically almost trading forex exclusively. Okay, then as the market started to settle down, remember premiums were through the roof on ES and on any futures at the time. So that was another reason. It just, the risk to reward wasn't there. So then when the market started to settle down, I played some stocks a little bit, some options on some stocks. And then I slowly transitioned back to mostly trading ES. And right now, I'm experimenting with Tradeovate because you can place standard contracts for $550 each. And again, the reason that's important, if you're with TD Ameritrade or, you know, the big boys, the bigger brokers, you're paying anywhere from $4,000 to $7,000 per standard contract. And the difference between a standard contract and an option, okay, I'll go over it again, is if you come back over here, okay, every tick, okay, these are ticks, right? Yellow is current price. Every tick is $12.50. 4 ticks is 50, 8 ticks is 100, so on and so forth, okay? With options, that's not the case, okay? Now, there's pros and cons to both. I went over this before, I'll go over it again. Okay, the advantages to options are less defined or more defined risk. And when price goes against you, it's typically, it could move 4 ticks, 8 ticks, you know, a couple bucks, and it might only drop your loss in your account, you know, 25, 37.50, something like that. Okay, if it dropped 8 ticks on a standard contract, it's black and white. You're down $100 per contract. Okay, so that's the negative of a standard contract versus an option. Okay, a positive for an option, if it spikes up in a hurry, sometimes the premium will spike up. So if you get a move and it happens really fast, you can sometimes make more on an option than you can a standard contract, okay, on the move. But the downside, and you know, you folks who trade options, you know exactly what I'm about to say. The downside is if those moves don't happen quickly, premium burn, right? Eat you up. Okay, so it may be going in your favor, okay, but it's taken a while to get there. You don't make that much money. Okay, so let's say that a name, any name, let's just use ES because we're looking at it. If ES goes in your favor $15, but it takes all day, and let's just say you held on all day, all right, just hypothetical. you're going to make 15 times 50, which is 750 bucks. Cut and dry. It's black and white. On an option, and I've had this, I'm using this example for a reason. I had this happen to me one time. I held on, and it was a yes all day long to a contract, and it just melted up. You heard that term, melted up, the entire day. And it went up about $15, and I only made like 50 bucks at the end of the day. That's it. Okay, so that's the drawback of options and the advantage of standard contracts. So pros and cons to both. I'm trying it out. Early, I think I like the standard contracts, but I'm still very, very early into this. And I am liking the ease of use of Trade of 8. I haven't even set up the hotkeys yet. Literally, all I have to do is click these buttons. If I click that, I'm in immediately. And if I want to get out, and I can set my stops, okay, so all I'd have to do is right click to set a stop, okay, and then if I wanted to, I could go ahead of it and click, just one single click, and then I have a target. So I've created a bracket order without going in and creating a bracket order. That's how quickly you could do it. I could just right click here and then come down here and click, and I've created a bracket order. So I'll either get stopped out or it'll hit my target, okay? Or you hit this button right here and it exits you out of everything immediately. And if you're in a bracket order, it gets rid of everything all at once. That's it. And it happens fast. Okay, it's lightning fast. So that I love. This is called the DOM, the depth of market. Okay, here's your time in sales. Okay, these are the actual orders being placed. I found out something interesting. So every platform does it differently. You see how you see these ribbons where you got solid color? It's either green or red. That's an actual change in price. Okay, and then if you see it and then it's just red after it, you'll notice all these are the same price. But then when it changes, there'll be a ribbon. Changes, a ribbon. Okay, changes and it's going up, it's green, a green ribbon. If it changes and it's going down, it's a red ribbon. But then all the rest of these are just trades that happened at that price. So that makes it really easy to glance over here if I want. But I keep it mostly on the DOM because it's that simple. Okay, buy at market, sell at market. You don't have to worry. Okay, like with options, the spread can be nuts, right? Sometimes it can be 75, $1, $1.25, you know, which that can get crazy. That's mostly at night or if it gets real volatile. But if you hit this, it's buying you right there. It's buying it right there, whatever price is trading at that time. And then what I do is as soon as it gets a few ticks in my favor, I typically go ahead and put my stop right at break even. Or at worst, minus 1250, minus 25. When you see my losses are bigger than that, typically it's because price was moving so fast I couldn't even get my stop in that quick. So let's just say I bought right here, okay, and then I went to put a stop in. Okay, I was going long and I went to put a stop in, but you see it's already below where I would have bought. I would have bought at 30525. So now I have to go, I think it's you got to go at least 2 ticks away from where it's trading to enter your stop. It won't let you just put it like, I think 1 tick away because it can move right into it that quickly. So if I enter somewhere and it starts to go my direction and it gets about 3 ticks to 4 ticks in my direction, I go ahead and place a break even stop. Then I know at worst I'm breaking even, at worst. Then if it really starts to go my way, I start sliding my stop up. And I'll be looking over here. I can come down here. Okay, I can see, all right, let's see. You see prices really starting to fall now off of here. So yes, you made a great decision to sell up there, Kelsey. So let's just say, I'm making this up, but let's just say this is my profit target, 304775. Okay, I could come down here. Okay, that's that level, but you know me, I'm going to get out early, so I'll probably go 50 to 75 cents ahead. Boom, I'll click it, and I've already got an order to sell right there. And so if price gets there, Okay, if price gets there, I don't even have to do anything. It's just going to sell before it even gets to my target, and I don't have to worry about a big bounce. Now, at the same time, right, I'd be trailing a stop. I'd be moving it myself. Okay, I move it myself. So as it goes my way, I just keep sliding it down because I want to give it a little room to be able to vacillate. Because if you put it too close, okay, there's times it'll come back and forth, 6, 7 ticks, back and forth, back and forth. So if you're too close, it'll take you out, and then all of a sudden it drops and you miss the rest of that move. So anyway, Kelsey percentage, that's hard to say, right? Because it depends on, I guess it depends on what your target is, right? With ticks, it's just $12.50 per tick. 3 ticks is $37.50. 4 ticks is $50. 5 ticks is $62.50. 6 is $75. So on and so forth. So and when you enter a trade, it tells you your profit and loss here, and then it tells you up here as well. So you always know whether you're in profit or not in profit. So hopefully that makes sense. And then you were asking, how do you know if your stop's far enough? You never do. You never do. Okay, so that's why I say this over and over again. It is personal risk tolerance. Personal risk tolerance. So I'm just going to make it up. I'm just going to say, if somebody would have entered right there, okay, for me, my personal risk tolerance would probably be right about where this the top of this range is. Okay, how many ticks is that? I can tell you. Give me a second. 59. It's about 8 ticks. Okay, so that'd be $100. So if I entered there and I'm thinking my stop should be up here, that means I need to make about $250 or $300 to make that trade worth it. Now, I'm not trading right now, but I would look at this and say, oh yeah, I've got a real good chance at that, right? So you only enter a trade like that if you think the probabilities are in your favor. Okay, and why do I say that? Because there's really nothing over here that can stop it. We're already almost down to the bottom of the body of this candle. And you guys know me, that would be my target. Okay, the bottom or just above the bottom of this candle. We've actually almost already been there. And what would that move have been? Okay, 59.25. And let's see what the low of this has been. 52.25. So that's already been $7. 7 times 50, that's $350 move. I had a $100 stop, $350 move already. There's my 3-to-1, right? But I want you guys to understand, I've talked about this before. When I'm scalping, I am not sitting there taking the time to go, okay, all right, I'm gonna put it there, that's 100. I need to at least make 300, so blah, blah, blah. I'm not doing that. Okay, because scalping, and you guys have seen my thing, some of them trades are literally seconds. Seconds, not even minutes. Some of them are seconds. So when it's all said and done, and I showed you guys this a week or two ago, okay, when it's all said and done at the end of every day, it's almost always that I come out around 3-to-1, give or take. Because subconsciously, I just know, right? If I'm entering here, I don't see anything that can really stop it if it starts going my direction. I know this is the obstacle to the top that would, if we broke through that, then I'm wrong, right? Then I'm wrong. Okay, so I can just quickly visualize it and know, okay, from here to here and from here to here, this is, at least 3-to-1 of that. And that's how I do it. Okay, now that's something that when you get more experience, you're able to just look at a trade and know about what's 3-to-1. And I'm not always having, I don't always have a $100 stop. Okay, most of the time, and I've already told you, as soon as it starts going my way, I move it to break even and then slightly into profit. That way, if it reverses against me, it's not really costing me anything. It's only that way if it goes against me. like immediately. So I see your last question, Kelsey. You're saying, so I find where my analysis could be wrong and place the stop there. Just as a starting point, and only if it doesn't put me too far to where I'm not comfortable. Let's just say that, it's not, but let's just say that that would mean $150 or $200 stop. I'm not taking that trade. I don't want, for one contract, that doesn't make any sense. Okay, because I'm not looking for 1-to-1s. I'm looking for 3-to-1s, and I'll be happy with a 2-to-1. I'll be really happy with a 4-to-1, and when it all said and done, it averages out to about 3-to-1. That's what I'm looking for. So if where I think my analysis would be wrong makes the stop too big, then I just don't take the trade, right? Because again, that's part of being a trader, is you have to do that analysis in your head. If you're scalping or day trading, that analysis has to happen pretty quick. If you're swing trading, then not necessarily. I just saw somebody that follows me, and I started following him. He's another person that owns a room. He was talking about this earlier today, and he seems like a pretty level-headed guy. He mostly swing trades. And still, even though the markets have calmed down, swing trading is so difficult. This guy's usually pretty good. He got crushed today. Crushed. Lost a couple $1,000 because of all this. All this through here. All this chop. Okay? You can day trade and scalp this kind of stuff all day long, but you can't swing trade it. You can't swing trade it. And let me come back over here. Okay, when we had this move yesterday, he went heavy into puts, and then what happened? Boom, went against him. But he's swing trading. So he entered like up in here with stops way up here, right? Like above here. Okay, those were where his stops were. Actually, I take that back. I think his stops were even way up in here because they weren't triggered. And then it came all the way back against him. And what he did is, instead of getting out, he added more. He added more, and then this is what's happened today. And this is what he was talking about. When he first saw this would have started last night. He was thinking, okay, I'm going to be okay. It's just going to keep coming back down. And if it gets back down where I need it, I can either lessen my size or whatever. But then this is what's happened. Still going against him. And he was already, when he posted it, he was already down a couple, like $2,100. This is just not a good environment for swing trading. Yes, exactly, Kelsey. Make sure the risk to reward is there, or you don't take the trade. Okay, even when we know, right? Okay, we know that this is likely. Okay, we're not going to enter a trade if our risk to reward is going to be bad, or if it exceeds our tolerance. So I was having a talk with you, DM. We were talking about risk tolerance. Somebody who has a $200 account, they have to have a bigger risk tolerance because they don't have that much money to play with. Then when somebody gets to $2,500, their risk tolerance starts to shrink. Okay, so if you have $200 in your account, you're using most of that most trading days. That increases your risk. If you have a $2,500 account, you might only be using 500 of that per day. Okay, or what is that, 25%, 20%, 20%? 20% of your account is in play. That's not your risk. Your risk will even be smaller than that. Okay, but you might only put 500 of it into play. If you had a $10,000 account, you might only be putting 2,000 of it into play. Because you never want the amount that you have in play, in case something absolutely catastrophic happened, that it won't wipe you out. You know, I've told you about my friend who got his account wiped out recently. And he's a good trader. He's got a lot of money. He plays big size. That was the guy I told you to make trades like $20,000 per trade. He had about 200 grand in his account, and he was on a hot streak. He'd won 5 or 6 trades in a row. Everything was going his way. He saw what he called his perfect setup, and he basically went all in. And it didn't go his way. It went exactly the opposite, horrifically. And he lost like 90% of his account on one trade. On one trade. Now, he's really good. It literally, I'm not joking about this, it literally only took him a couple of months and he was right back to where he was before he lost all that. But do you know how sick that would make you feel to lose almost 200 grand on one trade, and that's basically your whole account? He lost like 190 grand on one trade and had like 200,000 in his account. Okay, that's why I keep talking about psychology, and that's why, and he knows it. Like, he knows he made the cardinal mistake of putting too much of his account at risk. 20,000 is only 10% of his entire account. To us, in general, putting $20,000 on one trade seems like a ton of money, but it's all relative. If he keeps it at 20,000, he's only got 10% of his total account in play. And again, that's not his risk. His risk of that 20 is probably only 1 or 2, 1 or 2 grand. So that's all he has at risk, let's say 2%, in terms of his stops I'm talking about. But if something catastrophic happened, like what happened there, if he only had 20,000 in play, he only loses 10% of his account. You can overcome that fairly easily. You don't want to do that all the time, right? Okay, but it's much, much harder to have to overcome losing 90% of your account. So hopefully that makes sense to you folks who are listening. And as you guys can see, it's still trying to go lower as we get closer to power hour here. I'm having a hard time. I'm looking at the action, trying to decide, do I think it's really rolling over and going to start getting some steam? Or is this, let's see. Okay, let's just look at the move from today. Let's just say 29 to 65. All right, so 29 to 65, 30 to 65 would be 35, 36. Divided by 2 is 18. I'm trying to make the math easy. So 30 plus 18 is 48. So right about here, this level is about 50% of the total move today, from there to there. Okay, so are we just retracing back down to there, and then we're going to bounce, or bounce and then go lower, right? Okay, those are the kind of things we're looking for. Or 33% of the move is probably up in here, and that's kind of where we're at now. So if it would bounce here and start to go, it'd be highly likely that we're going to continue higher. So those are things to just watch out for. Well, Kelsey, one of the reasons price might change direction at 2 o'clock so many days is that's when the market starts to pick steam back up again. So if you've had a move going this direction most of the day, and then all the big institutional guys and hedge fund guys and prop desk guys and girls get back from lunch, typically get back around 1:30 or so. And they start getting back into the swing of things. Well, now maybe it's time to take profit, right? So if this has been the move, well, now they're selling and taking some profits. So that could be one reason for that. A lot of it has to do, like you look down here, here's volume. This is relative volume. Okay, you see where we were on the opening candle. This is how it looks almost every single day. Comes down, 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 and then here we are. Okay, 11, 12, 12:30, and then you'll see it start to come back up. Okay, 2 o'clock, and it'll start to come back up towards the end of the day. So, but I wouldn't read too much into that stuff. I mean, it might go in waves too, right? It might go that way for a while. And then you think, oh, I know, at 2 o'clock every day it changes direction. And so you obviously make a trade because you think it's going to change direction, and then it just goes the other way. or continues going the same way, I should say, right? Because I mean, basically, that's what I was just talking about with my friend. He thought he had the perfect setup. He loves to short. Okay, that's how he, probably 90% of the trades he takes are shorts. And he has a certain specific criteria that he looks for. He looks for parabolic moves, okay, moves that go like this, on lower price, lower float stocks, okay, which makes them risky to begin with. And then when they go up, if he gets a signal at the top, like a spinning top or a shooting star, and then it starts to come back down, when it breaks that, either that shooting star or that spinning top, he gets in and he tries to ride it all the way back down. So he looks for big trades. So he might play a stock that I'll tell you the exact scenario. The stock that he got crushed on, it was about a $1.50, $2 stock, and it had this parabolic move up into the fours, okay, which that'd be parabolic on that kind of a stock, right? Doubling in price in a day or two. He got his signal. It took it out. He went in and he went all in, and he was planning on riding it back down to about $2, $1.90, somewhere in there. And that thing ramped to $12. He got in at about $4. He actually bought on the way up because he was trying to average down, thinking, well, it's got to come back down. And so he bought more at like $4.90, and he bought more at like $6 until he had put like almost his entire account in the trade, and it just kept going and going and going. It went up to like $12, and he lost pretty much everything. It was like 190 grand. So you don't ever assume that you know something or you know the pattern, because the time that you get greedy, you're going to get in trouble. Yeah, absolutely. You could take profits based on something like that. Yes, for sure, you could do that. Yeah, but definitely, I wouldn't just enter a position thinking, hey, every day at 2 o'clock it changes direction, even though it might for a certain period of time. That's just like most days. Let's find the opening candle. Okay, most days, right? The initial move, whatever it is a false move, and then it goes the other direction. Today, a little bit. I mean, it poked its head up, but we already knew this trend line was there, this contracting range. So I knew it wasn't likely to just go that direction anyway. And then it flushed down, and then it came back up. But even though it does that, let's say 80, 85% of the time, you still don't want to go in heavy at open. You see this initial move, then it starts to go the other way, and all of a sudden you pile in, and it goes boom and blows up to the top. There'd be no getting out of the way of that, right? So just be very, very careful when you think you see something that plays out all the time. You got to be careful. So always assume, just like Mark Douglas says in Trading in the Zone, always assume that you don't know what's going to happen, right? Look at both scenarios and think about protection first. Think about protection over profits, and always assume you don't know what's going to happen. That's why I try to fight, even when I'm fairly confident based on what I see, that I know what price is going to do. I know you guys have seen it. A lot of times I can fairly accurately, tell you what's going to happen, but I hate using the words like guess or predict or I know, because I don't know anything. Nobody does. And if they tell you they do, they're lying, because a news event could occur, a world event could occur, a CEO could get fired. There's all different kinds of things that would totally negate what should have happened. Okay, what should have happened. So always assume you don't know what's going to happen, but you still play the probabilities. I hope that makes sense. Just in your mind, you don't want to over-assume something. Okay, so right now, before we get off here, we've been on here just over an hour. I'm surprised I made it this long. I am actually in a little bit of pain, but this move down, We came back up, formed a doji here. Now, if we take the top of this out, then it's possible, right? It's possible. We still have this here. Okay, there's two scenarios. That could have just been a level of structure and then we go higher. Or what else could we do if we got back up to here? Double top, right? See that? So if we got back up to here, we could double top, and then if you take the bottom of this out, you're almost guaranteed that you're going to get back down in here, right? Because we just know that that's how they play out over time. So those are the scenarios I'll be watching for, just so you know. Okay, if this takes this out, then when it gets here, I'm going to look, can it break through and keep going, or even break through, retest and keep going? Or does it get up here and reject, forming a double top? And remember, a double top, just like these lines, a double top, let me draw it in. Okay, a double top why can't I find, there we go, does not have to just come back exactly to that line. It could be just slightly below it. It could be just slightly above it, right? Okay, again, all that is a visual across there. All that is a visual. Sometimes double tops poke up slightly, you know, like the shoulders are slightly higher. Sometimes they're slightly lower. Sometimes they're spot on. But if it comes back up and rejects and then takes this out, statistics say you're likely to get back to the origin of the move up, right? Now, can you enter before here? You can if you get a signal, right? Maybe you get a shooting star up here or a spinning top and gets taken out after, you know, let's say you get 2 or 3 green candles here and then a spinning top and it starts moving back down, something like that. You can enter up there and then you're watching to see, can we break this? Because if it starts coming back down here and it can't break this, we may either triple top and then go lower, or then you might break through. So you may come up here, reject, come here, reject, and then go higher. Okay, but you can get in earlier if you get a signal. If not, you're looking for this to get taken out. So hopefully that helps everyone. Okay, guys, I'm going to go ahead and wrap this up. I'm a little bit tired, and I got to go lay myself back down flat again. So there's like literally a position I have to get in that makes me comfortable. I have to be almost flat, this elbow kind of propped on a pillow, and then turn to this side because it's my left lower abdomen that hurts, and that takes all the pressure off of it. If I turn to the left, it hurts. Or if I twist, or if I stand up and I like stretch out straight, you know, because that pulls on your abdomen. So it gets pretty boring, but I sort of have to lay a certain way most of the time. Now, yesterday I was feeling pretty, when I say pretty good, better. Went out, sat outside for a while, tried to walk around the house a little bit. I tried to sit in different places in the house, so I wasn't just like sitting in my room all the time. Now, we do have a chase lounge in our room. You guys know what those are. And I'll sit on that. But even that, it props my legs up, and then you're kind of sitting up like that. It puts a little pressure on. So I'll just look for an area where I feel comfortable, and then I stay in it for like hours on end. So, but I've been feeling a little bit better each day. We're pretty sure we know what it is. So anyway, thank you so much for those of you who asked and said prayers for me. I appreciate that. And hopefully I'm going to get back to normal. Okay, so far, okay, now also watch to see if we come down here and take this out without ever going back up, right? See how we went green and now we're coming back down through? Because we are in power hour. If there truly has been some shift of sentiment, right, and that's what we're trying to get a hold of, we would know that if that starts to take that out. Now, we know we have obstacles down here. Keep those in mind, but just watch. Okay, just watch what price action does. All right, everyone. Have a great day. I'll see you in the room. And tomorrow, if I'm feeling good, we'll be doing the YouTube live stream tomorrow. Okay, so have a great day, guys. Bye-bye.